So let's first do a quick round of self-intro, 45 seconds each. Tell us who you are and what sectors and stage are you currently actively investing in. Let's start with Lorcamin.
David.
Oh,
There's nobody over there.
yeah, please start.
I'm David Hamilton Nichols. I'm a fourth generation Californian. My family was there in agriculture, and then as California developed, got into real estate, and I'm the generation that got into investing in early stage companies. I'm currently a refugee here in Florida, based in the Palm Beaches. I invest in companies everywhere, everything from AI to healthcare to fintech, blockchain, climate, renewable energy, early stage, everything from pre-seed through Series A. I've spoken globally, everywhere from Davos at events during World Economic Forum to being a panelist at the Nobel Peace Center during Nobel Prize Week to being a speaker at the college university level in India. And that's, I think, about 45 seconds.
Thank you.
Hi, Greg Downey, Perham Ventures, based in Sarasota. Healthcare for 30 years, all on the innovation side. So started with J&J and worked my way up through a bunch of startups. We focus on seed to A. We do a lot of stuff in healthcare. We do stuff in fintech. We've done a lot of stuff in real estate as well. 80% of our focus is healthcare. We're looking for disruptive technologies that go after the 5 major killers. So heart disease, medical errors, longevity, oncology, and some of these other areas. We have a fund that we've deployed capital into. We've also syndicate with family offices. We put about $850 million to work over the last 3 years. Maybe that's less than 45 seconds.
That was great. Hi, I'm Dr. Bobby Awadallah. I'm a board-certified dermatologist and skin cancer surgeon. I've written numerous medical research papers, presented at medical conferences, written books, and have opened numerous businesses as well as invested in numerous companies. I look for companies that align with me and my core pillars. I've been in real estate and other businesses that have fundamentals that are based on core principles such as immediate real demand and immediate real cash flow. And that's why I'm here as an investor and co-founder of Braganza, and I'll speak to you a little bit about why that journey took me there.
Hello everybody, nice to be here. My name is Mark Flor. I run together with my wife our family office, Mingenta. We are based out of Uruguay, Switzerland, and from July on, Dubai. We are a very boring family office with a long-term strategy based on real estate and land banking. And main shift was about 9 years ago. We took the decision to stop only doing rich people richer and do something that leaves a little bit more of a footprint, and got engaged with a healthcare infrastructure development platform called Pansante, where we since then build sustainable hospitals globally. With this, in the investment in startups, our sweet spot is as well healthcare. Thank you.
Hello, my name is Jason Weiner. I'm running for governor of Florida. My background is in Wall Street. I come from finance. I started my own fund when I was 33. I worked primarily with family offices in life settlements, which is a mortality-based investing. About a couple years ago, I pivoted from life settlements to tequila making. Casamalca is my tequila, and a Bitcoin artist. So talk about a pivot. Artist from Wall Street is a weird pivot, but now I pivoted to politics. And I'm the first, I believe, the first human in history to be running his political campaign using Web3 and ordinal technology. I'm a true believer in it. It's a technology on Bitcoin. I think far too many people are focusing on AI, and the real opportunities is in ordinal technology. I believe is how Bitcoin really explodes, and And I'm excited to be a proof case, how one could run a political campaign using ordinal technology. And I'm excited to be here, and thank you, Anthony, for having me.
Hey guys, I'm Kingsley Advani. I run a family office. We've made over 200 investments in companies like SpaceX, Anthropic, OpenAI, Neuralink, Anduril, and also an early investor in Bitcoin. Discovered it in 2011, started investing in 2013. And I also run allocations.com. We set up 20 to 30 SPVs and funds per month. We've done about 15 SPVs into SpaceX, a bunch into Anthropic, OpenAI, Neuralink, and others. And also run Allocations X, where we trade these pre-IPO stocks as well. Thank you.
Hello, everyone. Good morning. This is Carmine Volani. I'm running multifamily office across mainly US and Gulf, and with opportunity in Central Asia, Europe, and LATAM. Usually late stage, already advanced companies, cash flow based. I used to be the CEO of Berkshire Hathaway's MFO private office, which basically means we're focused on buying existing cash flow companies. However, every company is a startup at one point, so we have to expand beyond the horizon.
Hi, I'm Candace Beaumont. I am CIO of L Investments. It's a small endowment portfolio for a US family that spends a lot of time in Europe and Mideast, and also chairman of Salsano Group. Sandro Salsano is the number 6 ranked billionaire in Central America, and our investments span everything from being an LP in hedge funds, private equity funds, a large fixed income portfolio, and doing direct investments across kind of every sector, from healthcare to defense tech to real estate. And Sandro is building one of the largest free trade zones in Central and Latin America, in Panama, and also get very involved in some of their philanthropic efforts, and sit on the boards of a few portfolio companies and NASDAQ companies and several SPACs.
Let's start with Dr. Bobby. So you are an investor and co-founder of Braganza. Why do you like them, and how it's been working with the team?
Yes, thank you so much. So, I kind of mentioned my strategy for investing. I've invested in a lot in healthcare, obviously, because I'm a physician. But something unique about Braganza was that my core pillar of demand was met in a completely different way. Usually we think of demand as a fundamental need of people, but Braganza has something that's different but equally powerful. It has an emotional demand that's attached to it. And what do I mean by that? We all remember that poster of the Ferrari above our bed or in our bedroom, or that little toy car Lamborghini that we played with. On a personal level, my son probably said vroom vroom before he said many other words. And so as that's placed in the subconscious, I think as adults, what happens is it goes into our conscious mind, and it actually is a source of inspiration for success in acquiring and being, an exotic car owner. And so the demand portion is there in a different, more powerful way. And the other part of the business that was very interesting was that we weren't going into a rental car agency purposely, intelligently. We were creating the structure for these agencies to perform in a more streamlined manner. And that allowed us, by providing the actual fleets, which we provide exotic cars for these agencies, and the operational support, allows us to integrate immediately for them. And why is that? Because all these car rental agencies face a similar problem. They eventually can't buy any more cars. And so for us to provide them vehicles, we plug in immediately to their revenue. We do a profit share with them, which is upwards of 60-40 or 70-30 on certain vehicles, and we capture the majority of the revenue. But also what that allows us to do is start the conversation of, hey, we have a streamlined technology platform that allows your bookings to happen automatically, your background checks, your verifications for insurances you don't have to deal with, and we take you, the client, through the entire journey, which really helps the operators, and of course that comes at a higher cost. So just in brief, the two core pillars of demand, the emotional demand being there, and instant cash flow integration into these companies with low operational demand was what attracted my interest in the business. And working with the Braganza team, from Damon, the CEO, the visionary, and being able to orchestrate the entire team, the tech team creating platforms seemingly overnight, but really difficult things to accomplish, and the operations team being able to execute these strategies has been phenomenal, and I've actually incorporated some of that into my own businesses.
Thank you, Dr. Bobby.
That's it. Thank you, sorry, long-winded.
Candace, so Saranac Group has investment in over 100 companies across real estate, luxury, consumer, tech, across so many sectors. And at that scale, how do you balance choosing between being a passive LP versus direct active investors and take a board seat?
Yeah, so I mean, it depends on the investment. I mean, if something's earlier stage and they need us to be more hands-on, we certainly can. And, then when we're co-investing with a GP or a private equity fund, we know that they're on the board and they have control of the situation, so we don't really need to be as involved with a board seat. So it really varies, company by company. Or we might co-invest with another family, and they might be taking a company public, and they might want another smart investor on the board, and they might want it to have us involved. So I mean, it really varies based on the circumstances, and we're happy if there's a good management team and other smart investors in the lead, and we know they're doing a great job. We don't really need to be on the board, and because we're an LP in funds and we also do direct, I mean, we're happy in both spots. So, and then sometimes, Sandro will get really excited about a company and he'll just want to help them, and then he'll get more involved, and it's more personal.
Okay. Laura Carmine, you sit at the intersection of sovereign wealth, multifamily office, and private equity advisory. Most of the startups in this room want to get into that ecosystem. Now, from your observation, why 99% of them never actually get there? And what does that 1% that do it differently?
Well, good question. The reality is that 99% of startups fail, regardless. And that's true in any industry. That's why my brain cells are too small. So that's why I'm not an angel investor or venture capital, because just the burn rate, it's humongous. However, that stated, you need to focus always on something which has a practical application. I'm leaving this afternoon going to California to look at a company that comes from a Caltech, NASA, JPL spinoff. Okay, so you look at companies that actually have had significant investment built eventually from, it could be a spinoff from a certain university. You look at the track record of the founder, and where do we exit eventually. Then what we do is, because we need to, historically, we need to focus to invest into startups as well. So what we do, we typically plan to work closely to large client investor, such as Aramco. We invest in a few companies, which Aramco has got a $55 billion program to invest across technologies. And so we look at Aramco Digital, for example, as a company plans to go public in 2030, but they have to make, let's say, about $500 million a year, this year, of revenue. What that means they're looking at 100 startups. And then they will actually do the POC. They'll do proof of concept, the proof of value, to begin with. So which is the most difficult thing for any startup, having a client. So they're prepared, if you meet certain parameters, to become the client and to invest. And of course, we will invest alongside, because we invest with something which is not just theoretical, but as a market application. So that stated, you need to work very closely to something can go quick to market. something that can be proven to market. Unfortunately, you see so many ideas that will make revenues in the next few years, but I always looked at, okay, if you didn't have any revenue last year, what are your revenue this year, and how happy this revenue going to be? Do you have IP, or just a consulting in the AI space? So there is the space has to be always to help to position the company that will have a validation in the marketplace.
Thank you. Jason, so you have a very interesting career. You used to manage over $2 billion fund on Wall Street, and then into tequila business, and then in Bitcoin, and now running for governor of Florida into politics. So this is not a typical career for most people. And for us, we are curious, at what point do you decide that the traditional financial system, the path wasn't for you, and how does that belief actually shape how you deploy capital?
Thank you for the question. I do believe I'm one of one, but I believe we're all one of one. So I think, you know, my history, I started on life settlements, which is it's mortality-based investing, where you bet on how long people live. I worked fund to fund, primarily with the largest institutions in the world, and I did it for many years. But you know, my income was based on people passing away. So I prayed to the Lord. I'm like, Lord, give me something else to do other than praying for people to pass away, because that was my income, and I built it up. You know, it was a very interesting, unique niche in the market. Not a lot of people played in it. And if you just applied some wisdom, you were able to be very successful. However, you know, I knew long-term is not what I want to do, and that's how I really got into Web3, I'd call it. And I got into Web3 like 4 years ago, and I really started learning about blockchain technology and smart contracts and the power of Web3, and it's a global idea, right? It's not, you know, we think of all the technology is very, you know, the internet obviously can reach across the world, but Bitcoin in specific is very, very global. So I kind of went on this journey. Actually, I started this tequila before I called Casa Malca, House of the Queen, and it's a clean spirit. My ex-wife Malca is my business partner, so it shows the type of temperament I have, and it shows what tequila would do to, you know, with enough tequila, you could be friends with anyone. But you know, we have 3 daughters together, and we kind of went on this journey. We got divorced, and I was, you know, very into NFTs, and I know NFTs is a sore subject right now. It's not, the market's been down, but I believe it's going to make a massive, massive comeback. And when I found myself single, and I became an artist, which was a really weird pivot, to be honest with you, because let me tell you, all the family offices that I used to go to them for very big checks, it's not very appealing when you become an artist. You know, it's like a completely different, they almost think you lose your mind, to be honest. It's like a very, very weird pivot. That was a much stranger pivot than actually going to politics. But I made an art collection. You know, I'm a libertarian. I see the world in a very keen way, and you know, my art collection, as a true Bitcoiner, is anti-establishment, anti-regulation, anti-big pharma, anti-big government, big banks. So I created this art collection. It's 21,000 pieces called "The Eyes Are Always Watching." It's the idea that God's eyes are always watching and not man's eyes, what they want you to believe, like the Marxists. You know, I'm not going to get too political right now. But I created this collection, and I realized is that my politics and my art actually mirror each other. And I had this idea to see what would happen if I would run for governor and use strictly Web3 and ordinal technology, and how that would play out. And I think it's a very unique strategy, and I don't think people honestly understand how powerful Bitcoin is. I do believe it's the true monetary system, and there's going to be a flip. I'm a Bitcoin truist. I think it's the first financial instrument that the world's ever had that cannot be corrupted. And we see nowadays, what is money worth when you could just, a government, good or bad, could just print trillions more of it.
Thank you, Jason. We got to move on. And another strong believer in Bitcoin would be Kingsley, since you invest in Bitcoin very early on. And since then, you have made so much investment across so many different ventures, and including SpaceX, Coinbase, OpenAI, and Anthropic. Do you invest them when they were early stage or late stage?
Yeah, I try to get in as early as possible. It's not always possible though. But yes, many of them I did invest quite early. SpaceX, I think it's like 2018, 2019, and that's been like a 30 or 40x so far. So you want to buy low and sell high. So you want to get in when not many other people are investing. And actually in those, when you invest quite early, there's less competition to invest. So you're not competing with, thousands or tens of thousands of other investors. If you look at Anthropic now, there's like people begging to invest and willing to sell their house or trade their house for Anthropic shares. So at this stage, it's quite difficult to invest in these pre-IPO stocks. So I'd say it's better to invest as early as possible. But it's hard to also tell back then or have conviction in the long term of the company. You wouldn't know back in 2021 or 2023 that Anthropic would get to $40 billion of recurring revenue. So you do have to kind of take a leap of faith in the dark with these investments and have like a 5 to 10 year time horizon. Just say, look, it could go to zero or it could go to $1 trillion. So you do have to have long-term conviction in these bets.
Amazing. Mark, you are co-founding hospitals and healthcare infrastructure across 4 continents while simultaneously running a family office with your wife. How does that operator experience shape the way you evaluate other founders when they come to you looking for capital?
Well, when we plan a new hospital project, our team of around 1,500 specialists need to shape the functionality of the hospital and the design, and all decisions that are taken are based on guaranteeing great quality of care. So every innovation we integrate in a hospital needs to tackle a real-world problem. There are no excuses. And with this, when we look now at innovations of founders, we always ask us first, is this a real-world problem that is tackled here that has a long-term, let's say, purpose, or is this maybe just very fashionable or financially interesting, but maybe not really of a plus value? And we only engage with companies where we can see a clear plus value beyond attractive financial model. I think this is especially important in healthcare because there you have a little bit more of a responsibility than just creating shareholder value. And to do that better, we, for example, since the beginning of the year, operate through a new entity we founded in Dubai, based off my function being a founding member of a clinical research roundtable in the United Arab Emirates, with the idea to help companies with medical innovations grow faster and grow in an ecosystem where they not only get funded, but get access to government, get access to hospitals, to universities, to research facilities, to grow faster and more efficiently.
Another big believer in health tech and med tech, I know, is Greg. And you spent over 25 years sitting between founders and family office. So you've seen both sides of the table more than anyone. From your experience, share with us what family office say what they want versus what they actually fund. Where's the gap?
That's a good question. This one. Good question. So it comes down to fundamentals. I mean, a lot of the family offices that we'll syndicate deals with, they're looking for, obviously, good multiples. They're looking for disruptive technologies, but also they're looking for ways to improve their own life. And most families, cancer rates are like 1 in 3 now, right? We have 1 in 33 births are on somewhere on the autistic spectrum. We have 940,000 American deaths every year for heart disease. So where we kind of play in an interesting realm is that it's not just another pedicle screw or a new knee or a new, wound product, right? There's nothing against those things, but we're looking for things that are actually disrupting the major standard of care, reversing these diseases, going to root cause. And so where I think we play in an interesting realm is where they'll look at a lot of healthcare deals we will only serve up projects that they know they're interested in. And where we have kind of a, call it our secret sauce, but it's going to where they can actually participate or benefit from these technologies. Because everybody wants to enjoy their wealth. But when you have cancer, you look at Steve Jobs as a great example, plenty of money, but he's no longer here. So what would you pay for, or what would you do to help reverse those healthcare issues? And so when we look at and doing due diligence, and we look at doing, potentially working with companies, we've looked at last year probably 500 companies, we've worked with about 50, it has to meet that criteria, and I think also is how do you de-risk it? Because early stage companies can be very lucrative, but they'd also be highly risky. Like the other question was, why is it less than 2% of early stage companies get funded? There's a lot of reasons why they don't. A lot of it's operational, it's people. And so if we won't engage companies or even choose to work with them unless we can help them beyond the capital, which is bringing to market. We've got a wicked cool technology out of Canada. It looks like something out of Star Trek. It can fit in the palm of your hand, but it takes 120 biomarkers per second. Can predict heart disease, can predict stroke, can predict stenosis. We're helping them get finance, but we're also bringing them in the United States. And we have a project right now we can potentially deploy it into 1,400 locations. So that's the combination of going, how do we de-risk it? They want innovation, they want good returns, but it's going, how do we de-risk these companies beyond the capital to ensure a return in 3 to 5 years is kind of where we play.
Thank you. David, you are one of the very few people on this panel who lead with impact as the primary lens, but impact investing have been having a reputation problem where people say that you either get the impact or you get the return, but rarely get both. What's your view on that?
Well, I actually at this point somewhat chafe at the term impact investing, to be frank. I've been investing for a number of years in companies, the sectors that I mentioned, that are solving some major world problems. And at one point when I had somebody do a little bit of personal branding, they suggested impact investing. Little did I know that I would be hit by people pitching me projects that would be a better fit for a philanthropist at best. And I still do believe that there needs to be impact. Because if you're solving a major problem, there is a market there and you are making an impact. And it's better to make money doing something good that's solving a problem than the opposite of that. So I do still believe in impact, but I have never been a big fan of ESG metrics, especially where early stage companies are concerned. If you are trying to check a lot of boxes, you are going to prevent your ability as an early stage founder to scale. And you will then not make the impact by solving that major world problem that your company is solving. So I think we need to reevaluate in some ways how impact is framed in impact investing, because you need a business model, and that is something I have always believed in. You need a strong business model as well as solving that problem. Because otherwise, maybe you're a fit for a 501c3, but then you are going to be perpetually having your hand out for fundraising. And so you need to have that model so that you grow. And that doesn't mean it needs to be a traditional model. Maybe it's an outside-the-box model, but it's still a very sound business model. And I would say those are some things that first come to mind. And of course, if you're doing a business, you are solving a problem. The question is, what problem are you solving and how are you helping people with that? And there will then be that market.
Thank you. Now, closing round, rapid fire, popcorn style. So feel free to jump in. Name one green flag and one red flag within the first 60 seconds when a founder comes to you and say something or show you something. You see it, it's like, absolutely, let's set up a follow-up meeting, that's green flag. If you see something that is absolutely, hell no, sorry, but no thank you, red flag. Fire off, what is a green flag or red flag that you want to share?
I'll start. The green flag is if I've already heard of the project or someone's already mentioned it to me, someone that I trust. So you want to be like relationship building before. A red flag is if someone pitches me something, I've never met them, I have no mutual connections, and it's nothing to do with anything that I invest in.
I think a green flag is team, right? So it doesn't you don't have to be a ready-made, perfect team in a startup world. But if you know you have weak points, or you're open to having, surround yourself with smarter people. I mean, that kind of is a general theme. If you're open to that, and you're willing, and you play well with others, and you're coachable, and you're humble, and you can execute, but you come from the industry and you've had success in the past, that's a green flag. Red flag is kind of what was just said, was when if someone comes, or someone's pitching you and they don't breathe for the first 15 minutes and they have no idea like what your mandate is and how you operate, that's usually I'll take a step back. But that you can work through that, but that's usually one where I'll take a step back.
I'll go. I would say a green flag is how they carry themselves. First off, if you're talking first 60 seconds, do they carry themselves well, and have they done their homework? If they've done their homework on me, I know they're going to do their homework in everything that they do. So those are a couple of green flags. I would say a red flag would be is if I've told them it's not in my thing and they keep pushing, it's like, dude, come on. I told you you're not something I'll invest in, but you're still trying to convince me. No, of course, maybe that could be positive that they'll never give up, but usually it doesn't work out well.
I think what other people have mentioned is right on target. I think you can tell somebody immediately if they can coherently put something together very quickly under pressure, and they can grab your attention. I think that's a green flag. And the exact opposite is my initial red flag, and because you get a lot of pitches that are all over the place, not focused, and it just immediately turns you off.
I think a big green flag is if you see that a founder is passionate for their idea and is driven by the desire to see it come to life. If we feel that an owner is more looking for, let's say, the exit rather than for seeing what they created working and functioning and being used, that could be the first red flag. The biggest red flag, I think, is if you see in the personality of the founder that they're simply not ready for their own success, and that they probably will on the way do everything to jeopardize becoming really successful.
I would echo what my fellow panelists said. Character, risk. Character I would say number one, but really risk reward. Upside, potential growth. But ultimately trust. Without conviction and trust, you really have nothing. So that's...
Well, green flag, you have a client. Red flag, you have no client. One level below is, do you have somebody can validate it? And if you are in a sector which we are, for example, we are in renewable energy, storage, and you come in with a technology that can make it more efficient, the storage or the batteries, then we validate it, even though you don't have a client. If you don't have either, and we don't have a way to validate it, then it's red flag.
I'd say green flag is, the team and the track record, and red flag is the opposite of that. Like if someone has a criminal record, we're probably not going to invest unless there's a really good reason. So,
Thank you to all panelists for sharing your insights.